We're going to look now at calculating break-even point based on the number of units being sold. So we had just looked at a contribution margin income statement. And if we were to look at that as an equation, it would say that operating income equals sales minus the total variable expenses minus the total fixed expenses. So that is operating income equals sales, which is the price times the number of units sold, minus the total variable expenses, which is the variable cost per unit times the number of units sold, minus the total fixed cost. The break-even point tells managers how many units must be sold to cover all costs. Once more than the break-even units are sold, the company begins to earn a profit, or as we call it, break-even plus one. A simple equation we could use to determine the break-even units is sometimes referred to as the contribution margin equation. That is, the number of units we need to sell in order to break even equals the total fixed costs divided by the unit contribution margin. The unit contribution margin is the price per unit minus the variable expense per unit. So let's jump into an example to see how this works. We have Whittier Company that sells lawnmowers for $400 each. The variable cost per mower is $325 per lawnmower. The total fixed costs are $45,000. So number one requires us to calculate the number of mowers that Whittier must sell to break even using the operating income equation. Number two, we're going to calculate the number of mowers that Whittier must sell to break even using the contribution margin equation. And third, we're going to check to make sure that 1 and 2 are correct by preparing a contribution margin income statement based on the break-even point. So number one, we want to use the operating income equation to find the break-even point. And we start out by saying that the operating income break-even equation is operating income equals the price times the number of units minus the variable cost times the number of units minus the total fixed cost. So we set the equation to equal 0 because it's the break-even point. That's 0 profit or loss. So 0 equals 400 times the number of units minus 325 times the number of units minus 4,000. We simplify that by saying 4,000 divided by 400 minus 325 equals 600 units. Number two requires us to find the break-even number of units using the break-even equation. And we remember that is the break-even units equals the total fixed cost divided by the unit contribution margin. The unit contribution margin was the unit price minus the variable cost per unit. So plugging the numbers into the equation, in this case, the total fixed cost was $45,000 that was given to us. The unit contribution margin, we're selling each lawnmower for $400 a piece. We subtract $325, which is a variable cost per unit. 400 minus 325 is $75. $45,000 divided by $75 equals 600 lawnmowers must be sold in order to break even. So now let's do a contribution margin income statement to see if the break even of 600 mowers is correct. We have sales, $400 per unit. If we sell 600 mowers, that would be $240,000 in sales. The total variable expenses were given at $325 per unit. At 600 units, that would be $195,000. $240,000 minus $195,000 is $45,000, which is our contribution margin. Subtract out our fixed expenses of $45,000, and we have operating income of 0, which means at 600 units we would break even. Let's look at an example using a service organization. So for this example, you're going to assume you're an attorney that charges $200 an hour for your services. and your variable cost per hour is $50. That includes costs for paralegal and office support to run your office. The fixed cost for your office is $30,000 a year, which includes rent, utilities, and the cost of leasing a copier. So you want to know how many hours you have to bill out to clients before you break even. Let's break this one down. So the first thing we're going to do is identify the formula for break-even units, and we know that that's break-even units equals the total fixed cost divided by the unit contribution margin. And let's look at the information given to us in the question. So we're given that the total fixed cost is $30,000. So now we need to know what the unit contribution margin is so that we could do the math. You bill $200 an hour for your services, and we know the variable cost per hour is $50. $200 minus $50 is $150 per hour, which is your unit contribution margin. We plug those numbers into the equation. $30,000 divided by $150 is 200 hours, and that's how many hours you must bill before you break even.